Welcome, this is Drew Blazik with Logos and Markets. And in this video, we're going to talk about the working capital schedule. And what we're going to do in this video, we're going to look at what the application is to other schedules or financial statements. And I'm going to show you a couple ways to make it easy for you to to figure this out and to create your own working capital, some strategies, and for the equations. So again, like all my videos, I have the Excel sheet in the SIM method. You can find a Logos and Markets. You can go to SIM Finance and then find under Financial Modeling. In the show notes below, you'll see a link that you can go directly to the website. And then also use it. It's free of charge, and you get to practice. Hit the reset button, and it'll erase everything. It's the best way by a long shot to really memorize these equations. Okay, with all mine, I would go to the grade, and you want to see the impact when the working capital schedule is blank. You want to see the impact. How does it affect all the numbers? Overall grade is the numbers. Did it affect it if there is a number that's wrong? They'll show it there. And then the weighted grade, that shows if you did it correct. That means if you look at it, it's not 100%, which means you have to plug it in the cash flow statement. You got to plug it in the balance sheet, and that's it. But you see, if the working capital schedule is incorrect, you see how it affects all the other numbers as well. Let's get to it. We got the working capital. I'm going to scroll up. That means we need to plug stuff in the balance sheet. We need to plug it in the cash flow statement, and we will use the income statement to plug in numbers for our balance sheet because it doesn't have the gray. So that's the application. First thing I'm going to do is plug in our numbers from the income statement. So I got net revenue and cost of sales. Net revenue is solved on the revenue schedule, but what I use is the income statement to drag down. So let's go to the income statement. And what I'm going to go to, got to remember this, is here's revenue. I don't want gross revenue, and students make this mistake all the time. I want net revenue. So I'm going to choose net revenue. And then next is cost of sales. That's the cost schedule that projected it. However, I'm going to use the income statement to bring the previous years and the projected years because I already have that in there. Now with the cost of sales, and students make this mistake all the time. I don't want the total cost that included the SG&A. I want the cost of sales. That's the number that's coming from the cost schedule. Okay, we got that solved. Hold Shift, Control R, bring those in. Next, I want to find out how many days are in that year. And I'm going to say equals, and I'm going to type in date. And what it's asking for is the year, which is 2020, comma, how many months are in that year? 12. And then we go off 31 days. And then what I'm going to do is subtract. I'm going to type in date. And I'm going to do the previous year, 2019, comma. The month is 12 months out of the year. That's how much our business operates. And then 31 days, close it up. So we got 366. And then Control R. And you see that we have a couple 366. So get these numbers correct, we need to do the date. Okay. I'm going to go to the balance sheet real quick and explain a couple things. If you are typing up your working capital and you don't know what items belong in working capital, it's really easy to remember. Go to current assets, and under current assets, we have the first line item is cash. That's not in working capital. Just remember that the first item, and then the four underneath it are accounts receivable, inventory, prepaid expenses, and other. These are assets. For example, inventory takes cash to increase inventory. So if inventory goes up, cash goes down. Accounts receivable are people coming in our store buying on credit. If more people buying credit, accounts receivable goes up, our cash actually goes down because more people are buying on credit. Prepaid expenses goes up. Same thing. So these are all assets. So what I would do is copy that, paste it in your working capital. Those are the first four items. And then the other parts of working capital are on current liabilities. And what I would do is the first line item is revolver, just like cash. You do not include that. That's in the debt schedule. However, the two items underneath it are. So again, you go to current assets, you take the 4 underneath cash. Those are working capital. You go to current liabilities, you ignore, just like you ignore cash, you ignore the revolver and pick the 2 underneath that, copy that. Those are your 6 items. Go back to working capital. What we have here is days in. I want you to think about days in as a percentage of something. And then account balances are the total amount that we have. Days in, for example, for accounts receivable is how many days does it take for us to collect our money? Accounts, that's what it means in that example. Accounts payable is a liability because we owe it as a business, right? I owe it to someone. So if I work at Lowe's Home Improvement and Whirlpool sent a bunch of washers, I own an asset, but it's a liability because I haven't paid it off yet. I haven't paid it till the end of the month. That's a liability. And remember, liabilities are opposite. If liabilities go up, our cash goes down. I'm sorry, liabilities go up, our cash goes up. So liabilities go up, our cash goes up. It makes a lot of sense. You go to the bank, you take out a loan of $1 million, right? My liability goes up, I owe $1 million. However, you have more cash, right? $1 million are in your account. So assets are the opposite. So if inventory goes up, I had to use cash to buy the inventory, right? No one's buying my inventories, I have less cash. If inventories go down, my asset goes down. Everyone's buying my inventory, I have more cash. So it's important to see that in that relationship. Okay, so first thing we can do is we have actual years, we got projected years. So the first thing I'm going to do is I'm going to bring in my last 2 recorded years, right? I'm going to bring in those balances, and that's going to be found in the balance sheet. So I'm going to go equals the first 4 items on the balance sheet. So I'm going to go to current assets, go to account receivable. So make sure you're in the correct year. I'm going to hit enter, and then you can do this pretty quick. That's going to be 1 over and then 4. So I'm going to go RD, control RD, and you can fill that in pretty quick. And then I'm going to find the account balances for our liabilities. And that's going to be account payable, right? The 2 items underneath the revolver. And I'm going to enter that in. And same thing, I'm going to hold down shift, highlight that, control R and D, and that's going to fill that in. So what we have is the last actual recorded years. Now what I want to solve is the days in. I want you to think of it as a percentage. Makes it easy to remember. So what I'm going to do is the first one, accounts receivable, is the only one that uses revenue. Inventory, prepaid expenses, other assets, accounts payable, and other liabilities use cost of sales. So just remember that accounts receivable, I'm going to solve it, and then we're going to make it absolute cells references so I can do it really quick. Do one cell, drag it down, and solve. Okay, so we got accounts receivable. So what is that? What I'm going to do is I'm going to go to the accounts receivable balance that I have. It's a percentage. If you find a percentage of I made 10 free throws and I shot 100, I have to divide it. So what I'm going to do is I'm going to divide it by revenue. I'm going to find out what percentage of my accounts receivable is revenue. Easy to remember. I'm going to divide it to find days in. Since I divided it, I'm going to multiply it times the days. Okay? Hit enter. Drag it across, go R. Control R, and that fills to the right so we can fill that in. Okay, the next 5 examples are going to use cost of sales. It's going to be a percentage of cost of sales to find the days in. How long are we using inventories or holding on to inventories? How long does it take to sell it? How long is prepaid expenses? All those are cost of sales. Okay, so what I'm going to do, I'm going to do the first item like I did with accounts receivable, and then prepaid expenses and the rest will make absolute. I'm going to go equal, and then I'm going to go to our balance of inventories. I'm going to divide it because it's days in. I'm going to divide it by cost of sales, and I'm going to multiply it times the days. Since I divide it, I multiply it. That's going to give us that. Okay, next we're going to do the prepaid expense, and now we're going to make this absolute. I want you to think it through when we do it. So I'm going to find the percentage of prepaid expense. I'm going to take the prepaid expense. I want you to think about it. When I drag it to the right, I want the prepaid expense to hit to the right. And if I drag it down, I don't want that frozen. I don't want it frozen to the right. I want it, if I drag it down, I want to hit other assets. So I'm going to leave this alone. Nothing's going to happen there. So I want that to be free, a free cell, not an absolute reference. Then I'm going to divide it by cost of sales. I want you to think about it. I want it to drag to the right, but not down. I want cost of sales by all these items. So I'm going to hit function F4 twice. I don't want it to go down, but I do want it to drag to the right. And then what I'm going to do is I'm going to multiply it. I'm going to multiply it times the days. And then I'm going to hit function F4 twice again. And then that's going to be correct. So now what we did was we fill in our days in perfectly. So we have our days in and our balances solved for our actual years. And what is that saying? It takes 43 days. So we look at that. Now, what we want to do is we're going to project out our days in for the projected years. And all that is, you go to the assumptions, we project those here. And those are all lined up, exact with working capital. So it's very simple. We're projecting, we're guessing, we're making a logical assumption. If it took 43, then 50, maybe it's going to stay at 50 for the projection. You're going to make those projections. So all I'm going to do is say equals. I'm going to go to my assumptions page and I'm going to hit that first cell and then highlight the rest, hit Control R and D. Very simple. Those are just projections that you're going to make, and we made it very similar. Now, my thing is you have to see what the days in were for the actual years to make a logical assumption of the projected year. Like inventories, we're doing bad, it declined, maybe you want to improve. You're making a logical projection. And then what we're going to do here is if we have the projected days in, that can give us our account balances for the balance sheet. All right, so what we want to do here is now we want to think about is we're not calculating days in, we're calculating balances. So what equation do I want? Remember, account receivable uses revenue alone. So what we're doing here, if I want balances, think of multiplication, right? I want accounts receivable. I'm going to go to accounts receivable and I'm going to multiply that times revenue, right? That times that will give me a balance. Okay. So if you're finding balances, I'm going to multiply those two numbers. Since I multiply them, I will divide by days. Okay. Easy to remember. If I'm dividing to find the percentage days in, I multiply times day. If I find the balances, I multiply those two numbers and I divide it by days. So what I'm going to do is hit enter. Since it stands by itself, that's revenue. I'm just going to shift R to the right. And now all the rest of these variables, these 5 variables, are going to use cost of sales. So let's make sure we make our absolute references correct. So what I'm going to do is I'm going to take inventory. I'm finding a balance that's going to be multiplied times cost of sales. Okay. Now, what do I want? I want cost of sales to drag to the right. I want it to drag to the right. I'm going to leave that letter alone, but I don't want it to drag down. So I want to freeze the number, the row. So I'm going to function F4 twice. I want the $sign in front of that. Since I multiply times those two items, I'm going to divide it by the days. And what I want the day to drag to the right. So I'm going to hit function F4 twice. So you get pretty quick at it. So if you did that, all I have to do is fill in the rest. There we go. Again, you can get very efficient and quick with working capital. Next, what we want to solve is what is our net working capital? Our net working capital, I'm going to sum up all the assets and I'm going to subtract. So I sum up those and I'm going to subtract out the sum of our liabilities. So that's going to be our net working capital. Have it go across, Control R, that's filled out. And then next what we want to do is what is our change in working capital, right? If assets went up, this, net working capital, you want to really think about what is that saying? Now this is the same from 21 to 22. Well, okay, that's the same number there. So let's look at 22 to 23. Look what's going on. It declined. What does that mean? I took assets minus liabilities. So if it declined, it means that the current assets went down. That number declined. That means the current liabilities could have went up. What happens to cash? So what we're going to do here is I want the change of the previous year minus the current year that you're in. Okay, what does that mean? If that number went up, that's going to be a negative. That makes sense. If assets go up, our cash goes down, right? If it went down, that's going to be a positive, right? If we look at 2023, it went down. So let's just add this, show you the effect of it. So look, we went from 56 down to 49.6. That's a positive on cash because assets may have went down relative to liabilities. And remember that if assets goes up, cash goes down. If liabilities goes up, cash goes up. If I get a loan today, I have more money today. That means my liability went up. I owe more money to the bank, but I have more cash. I took that loan. If I have my inventories go up, I had to use cash to buy more inventory, so that went down. That's what it means. Okay, so we got our working capital all straightened away, and all we want to do here is plug in some numbers. We have the balance sheet. It's a balance of some sort. So let's do our assets first. We want the balance of accounts receivable. I'm going to go equals. And this is a mistake a lot of people make. They go to the days in and they don't do the balances. See how it looks very similar? Because remember, this days in, these are in millions. These are days. So make sure you're in the balances. I got accounts receivable. I'm going to hit enter. And what's nice about that, it's very quick. Hit RD. You can fill it in. Next, I'm going to go to liabilities. I want to find out that balance of my liabilities. Where is that found? It's right there. Very quick. Control RD. We filled it up. Hey, if I go to the grade, it's still not completed, right? It's not balanced. So the last what I want to do is, it's important of the net working capital is very important. It shows our impact on the cash flow statement because net income, I'll explain this for a couple minutes. Net income is what we're making money on the income statement. However, there are activities on there that don't show or reflect what's going on with our cash. Depreciation was never a cost to us, a direct outlay of cash, so we have to add it back in. Deferred taxes on the income statement, right? Government lets us to defer taxes out because of timing differences. That we subtracted off the income statement, but we never really paid it. And then we got changes in working capital. Someone comes in our store, buys $1 million. Well, the income statement shows we made $1 million on net income. However, they're not paying us back till next period. So we have to see the impact of our change in net working capital. So I'm going to go all the way down there and pick that change. Make sure you pick the correct year. I'm going to have that go across. There you go. It looks all green. Our grade looks perfect. Again, go to Logos and Markets. Please download this file. Practice till you get it down. This is the #1 way my students tell me how they memorize this stuff. They learn it within 3 to 4 times. You'll never forget it. I promise you that. Thank you, and God bless.